How do we trade today, especially ahead of an important market-moving data from the US, as also the weekend? Bhavin Desai of Motilal Oswal joins us. Bhavin, what are you all advising clients? 5950 is here. Would you retain longs or even assume longs?
We've been holding on to this so-called important level of 5900. We've been having a large amount of put writers unwilling to exit out of their positions. So unless it gets broken, we would like to believe that there is a decent cap for the downside at around 5900. So at this juncture, we are advising our clients to keep hold of that 5900 as a stop loss level and trade long and trade into this range of 5900 6100 till it gets broken.
Reliance Infrastructure has been the biggest mover so far this week. It's seen a rally of 6.7% up until now this entire week. What's the call on Reliance Infrastructure, Bhavin?
See, the carry forward of longs which are created during the trading day have been a little on the lower side, so would be moderately bullish. If I had to take a position, we would advise to go ahead and buy a one step out of the money call and trade on the stock and reap profit as long as it lasts.
Okay, let's what would you advise being bullish on the Nifty itself? Which is the stock that inspires your confidence? Would it be the IT stocks, TCS for instance?
See, we started this expiry on a very interesting note. We had a third of stocks rolling in with longs, a third rolling in with shorts, and a third being neutral. IT in this entire scheme of things was the sector which had neutral stance. We saw short covering, so short was out and the sector was light, so neutral was the call. So let's see if we see some amount of long positions getting built around these levels. We wouldn't mind sticking our neck out and actually going ahead long on the IT. At this point in time, we are more or less neutral on the sector. Would rather pick something from a private banking space which added longs and is trading right now with sufficient amount of long bias than the IT space.
Bhavin, how are you reading this 5,000 crore of index futures that the FIIs have sold so far, in the last few trading sessions? Is it just long unwinding, or now are you seeing, perhaps short positions also being built up by the FIIs on the Nifty end?
See, the data that is published by NSE is clearly pointing at the long unwinding. We've been seeing since last, if I'm not wrong, about 4 odd sessions, we've been seeing net sell figure continuously and the OI getting dropped continuously on the Nifty futures. The index futures open interest, that's what they published. So that clearly points at an overall long unwinding by the institutional participants on an aggregate basis. And even if you look at the Nifty futures open interest on NSE or for that matter SGX, both of them have shedded in excess of about 20% for NSE and about 10% for SGX since the day of expiry. So we've been seeing a lot of long unwinding trades in Nifty. What this essentially means is that it makes the index a lot more vulnerable when the instrument goes light without a lot of directional bias into it. So that is one more reason why we could see the choppiness continuing in the coming days.
Okay, if your overall mood is so bearish, do you have any short or bearish recommendations on even any of the mid cap stocks? I
am sorry, but I wouldn't be bearish till we see the other side of 5900. Okay. So at this point in time, I am with those writers who have written those 5900 puts and trying to catch the Nifty on the low side at near 5900 with tiny bit of stop loss and trying to play long till it gets broken.
Okay. All right, we'll leave it at that. Thanks a lot, Bhavin, for joining us with your thoughts. Ranbaxy stock again in focus.